Good afternoon, everybody, and welcome to the Altus Group Benchmark Manager webinar for today. I am Matt LaHood, the head of Platform Data and Analytics. I'm excited to be joined by Paul Maloney, one of our foremost solution experts here with the company, and ready to walk you guys through what we have just released earlier this year at the end of March with Benchmark Manager. Before we jump in, just a couple of housekeeping notes. As with most webinars this day, everybody is going to be automatically muted as they come in. If you have any questions, feel free to submit those into the Q&A, and we'd be happy to follow up with you on those. And then also the session is being recorded, and we'll send that recording out to the email participants, or the registered participants, excuse me. So with that, we'd like to start off with a poll just to understand how people are currently benchmarking today. So we understand there's a number of different ways people can be doing it. Maybe you're using internal data, maybe a combination of internal and external data sources. Maybe you're using a third-party provider, or might not even be benchmarking now. But we'd like to get a sense from the audience here what you guys are currently doing today.
All right, thank you for those that participated in the poll. It looks like the lion's share of you guys on the webinar today are using both a combination of internal and externally sourced data, with everybody else kind of falling equally into the other buckets.
Okay, thank you everybody for that. So to get started here, what we'd like to do is just talk a little bit about the build up to Benchmark Manager. So we started this process a little over a year ago now. We were really wanting to build a new benchmark solution. We knew we were sitting on a tremendous data asset and really wanted to maximize the value of that asset for our clients. So we embarked on a pretty big effort to do some market research to really understand what were the challenges that our clients were having in this area, so we could really put forth a solution that was going to be market leading. We actually just did an innovation session, a couple of them. We did one in Toronto, one in New York within the last 4 to 6 weeks. We also did a custom advisory board meeting. And through those sessions, we actually got a lot of feedback that was pretty well aligned with the market research that we initially conducted for Benchmark Manager. So here I can quickly take you through what we found. The findings there really sort of broke out into 3 different categories. Not surprisingly, a couple of them are related to data. So the first one was really around data availability. We had some clients who didn't have any data available really to them at all for benchmarking, and ones that did have data available said it was really extremely difficult to get to the insights because there was so much work that had to be done, not just with the benchmark data, but their own internal data and getting that ready to compare against the benchmark. So oftentimes they'd have to aggregate, get all of their modeling data into one place, scrub over that modeling data, make sure that there was consistency in it so that they could aggregate it, and then aggregate it up into portfolios. And then at that time, bring in the benchmark data, merge it together, and then start to drive the insights. So a lot of hard work, a lot of effort was going into the data because nothing was really readily available for them. The second thing we heard was around the relevance of the data. So they have a pretty good idea of what's in the benchmark and obviously what's in their portfolio as well. And maybe they had a large portfolio. It was the first fight across different sectors and geos within the US. And looking at those against the benchmark, there was oftentimes parts of their portfolio that weren't really well represented in the benchmark sample. So either they weren't really getting the apples to apples comparison that they wanted, or there was specific drill downs that they wanted to do to get specific insights that just weren't available. And then on the last one, around intelligence, really at best, people were just getting data. So, what's the average market rent for a particular sector? It's interesting, it's useful, but it's not really intelligence. So just another quick poll, seeing how you guys relate to some of those challenges and inefficiencies that we had on the previous slide. What's really some of the drawbacks that you guys have on benchmarking today? Is it around that data availability? Is it around the relevancy? Or is it around more of the availability of resources to drive those analysis? And we'll just give that a minute.
So it looks like many of you fall into the category that the data you need is not available, or it's definitely not organized effectively.
Okay. Yes, that's a huge problem that I've referenced the customer advisory board meeting that we had recently, and that was definitely one of the #1 things that they said. Just please, whatever you do, make it easy. Make it easy for us to access and use the data. And really, that's one of the main things that we're trying to do, not just with Benchmark Manager, but with Argus Intelligence in general, right? So we have access to very reliable, consistent, robust data, right? All of this data is coming from the final valuation models. So whether that's something that we did, our advisory team did on your behalf, or you're doing in Argus Enterprise in the cloud, that data is used for major decision making, both at the asset and portfolio level. So it's very, very robust, very rich data. And what we're doing is we're really trying to unlock that data. So if you're in Argus Enterprise in the cloud, you're working with your models, all you need to do is tag those models in AE, and that lets the system know that you want to share it with the platform. So AE in the cloud is part of the Argus Intelligence family. And so when you save that model after it's been tagged, or you calc that model, it's automatically shared with the platform. So there's no downloading of data, there's no doing anything in Excel, there's no waiting for a batch process to run overnight. You just do the things that you do today in terms of updating, saving, calcing that model, and it's automatically shared. Once it's shared, once it's in Argus Intelligence on the platform, it's associated with an asset, and then that asset you can build portfolios with. So you're free to mix and match assets and portfolios any way you want, and that's really just it's a one-time event. So you set up that portfolio with a group of assets, and then anytime the models are updated, they're automatically associated with that asset and then automatically associated with that portfolio. So as the quarters roll over and those models build, all of those associations are automatically made. And then as you'll see, what Paul will show in the demo, there's just a drop down to select the portfolio for Benchmark Manager. There's nothing there that you have to do. Those portfolios are automatically shared with Benchmark Manager. And then it just depends on the permissions that you have for particular assets and portfolios, and that'll control the display on what you actually see. On the relevancy and making the data relatable, what we're doing here is we're bringing together both sides of our business. So we have a very large advisory service that builds valuation models on a regular basis for all of our clients. And we have the software side with Argus Enterprise in the cloud and all of the data that's building there. So it's a very rich, a very unique data source that we're bringing together for the first time to provide value to you guys. And I'll touch a little bit more about the size of that on the next slide. And then finally, we really wanted to focus on providing intelligence. So we're not just giving a set of numbers, we're not just showing statistics. What we're doing is we're showing, here's how my values have changed for my portfolio, here's how they've changed for the market, and here's the differences. Here's the differences in terms of yield and cash flow. Here's the differences in terms of allocation and selection. I can look at those yield and cash flow. I can get into specific metrics. I can drill down into different sectors, into different geos, and I can take it all the way down to the asset level. So the same metrics that I look at the portfolio level are available at the asset level. So if I see a drop in occupancy, if I see an increase in my cost, I can relate it all the way down to the specific assets that are driving those differences. That's really what we mean by intelligence, and that's what we're trying to provide here. So the last slide before we get into the demo, really just talking about the volume of data from both sides of the business. On the advisory side, we're supporting over 200 funds now, really well over 200. That equates to over $1 trillion in properties that we value every quarter. So tens of thousands of models being generated from that business annually. On the Argus side, we now have over 25 million models in the cloud, and that's growing by about $1 million models, every quarter. So what that translates into is several hundreds of thousands of models in Benchmark Manager for you guys to use to reference against. And it's 41,000 assets, unique assets. That's all time. So we've seeded the benchmark with 5 years of history. So over those 5 years, we've had over 41,000 assets in there. So with that, I will turn it over to Paul to go through the demo.
All right, thank you, Matt, for the introduction. So what I'm sharing is Benchmark Manager. I'm sharing the platform itself, so you can actually start putting some pictures to what Matt was describing there. And really what we're seeing here is the Benchmark platform. It's designed as a top-down solution. It's going to allow our users to go in and look at things from the highest level. So in my example, at the fund or portfolio. So here's where it does link to all those portfolios that Matt referred to from Portfolio Manager. And ultimately, we can drill down into this to any level, including specific markets, or maybe it's an individual asset within a market. So what we see on the screen here is the portfolio that I'm working with, the period that I'm looking at. And in this example, it is the most current quarter, so the Q1 2025 benchmark results. And I'm looking at things on a quarterly comparison. So I'm comparing Q4 2024 versus Q1 2025 in my example. So with this specific portfolio, I've got 79 assets across multiple asset classes, and I'm comparing against our benchmark in this example of 16,000 assets with about $826 billion worth of value here for this specific quarter. What we can see kind of in a quarter in review is right here in the middle, I've performed pretty much about how the benchmark has performed. So we can see that zero value change there. And in the most recent quarter, both the portfolio that I'm looking at, so my Connect portfolio, and the benchmark have appreciated. So very closely in this sense. We can see that it breaks it down into two different components. So on the side that we're looking at now, we've got the cash flow and the yield aspect of this. So that yield being our discount rates and cap rates, and then the cash flow being the other key drivers, so things like our occupancy and our rents and whatnot. And what we can see is both of these from a yield perspective were positive. So in both cases on the benchmark side and my portfolio side, the yields are compressing. we can also see from a cash flow perspective that things have changed a little bit differently. So from a cash flow perspective, the benchmark as a whole is positive in nature, whereas my cash flow has actually been a negative as it pertains to how I performed over the previous quarter. So on the benchmark side, we can see a couple things. We can see that occupancy is compressing a little bit. We can also see the operational expenses are going up. But overall, there is still a positive effect from the cash flow perspective versus my portfolio. I've got similar trends. I've got occupancy still compressing a little bit. I can also see, though, that my expense ratios are going up and my market rents are not going up in the same fashion. So I might be under near-term kind of cost pressures within my portfolio. And again, that tracks right alongside with what we see on the benchmark aspect of it. So again, my cash flow is negative, and it's mainly due to the operational costs of my properties and the rents not kind of catching up. So everything we're looking at right now is in the view of Q1 2025. Where this really starts getting power is when you look at it into the context of what's gone on in the market over a period of time. So one of the cool things about this is we do have a 5-year look back aspect to this. And as we go into that 5-year look back, you'll see there's a couple components. And when we see mine here in a moment, we'll see from a benchmark perspective, this kind of tracks with what's been going on with the market for the last few years. And if we think about kind of the end of 2022, when we really started getting into the downturn period in the market, we see a drastic change here. And we can see a lot of this change from Q4 of 2022 up to present has been driven by this yellow bar, that yellow bar being the yield impact here. So really a lot of this is being driven by investor sentiment and the higher cost of capital over those periods. What we start to see as we move out kind of into late 2024 and current period up here in 2025, from a benchmark perspective, we do see the market correcting a little bit. So this is the first quarter in a while that the yield impact has turned positive. So if we kind of hover over this, we see there is a positive impact on yield there. Cash flows improved for a couple quarters in a row, but still not to where we were kind of post-COVID, but we're on an upward trajectory finally. So from a benchmark perspective, we see how the market has trended here. Now, if you're a subscriber to this tool, this is where you can actually get in and look at your portfolio as well. So if I switch to the portfolio side, now we're looking at the Connect portfolio, we can see it's trended very similarly. So again, it really was cap rate driven or investor sentiment driven, but we see there are some bigger sways kind of on the cash flow side of things here. So the 5-year history really allows you to kind of put this in a context of what's gone on with the broader market. So we're looking at kind of the yield and cash flow effects of this, but we can also see how all of the relevant cash flow and yield metrics have changed kind of throughout those periods as well. So if we want to see a specific period in time for market rents or contract rents or what's going on in occupancy, we get to see those same kind of values. The other aspect we can really break this down into is the attribution analysis. So from an attribution perspective, how much of the performance in my fund is due to the structural effect? So if we think about the allocation of assets into my portfolio, and then how much of that might be due to the selection of specific assets in the portfolio. So specifically in this, we can see I'm a little bit underweighted in retail. So I'm actually way overweighted in office. So kind of there is an allocation effect on my portfolio. As you'll see in a moment, retail actually performed really well this last quarter and is kind of on an upward swing versus office, as we know, has kind of not performed well over a while. So structurally, I'm at a disadvantage due to kind of being overweighted in office and underweighted in retail. But from a property perspective, in certain kind of instances, I have outperformed. And actually, overall, I've outperformed the market. I do have a positive kind of selection aspect here, and we can see industrial and residential have performed pretty well. So if we were to kind of look at this, I could scroll down into the attribution by property type, and this kind of reinforces that. We can see kind of the overall appreciation on the benchmark side has been driven in this most recent period by our retail component being a full percentage point up, closely followed by residential, industrial, and office. So they all did have positive appreciation in that period, but retail was a top performer. So part of my performance is due to the fact I don't have a lot of retail. In this specific portfolio, I've only got a couple properties. Where this really can start to become powerful, again, is when we look at things over kind of a longer trend or start looking at it with a little bit of history. Instead of looking at things quarter over quarter, we can actually come up here and switch this period and look at it over a longer trend. So if I pick 3 years here, one thing will stand out to us. Across all of my sectors, there were write-downs in value, right? So we can see there were write-downs in value across residential, industrial, office, and retail, and specifically very high write-downs in the office sector itself. Me being kind of heavily weighted in office, that really kind of did have a draining effect on my portfolio over this period of time. So the ability to go in and drill in, look at things from a kind of cash flow and yield perspective or a structural perspective really starts giving us a lot of insights that aren't always easy to kind of get out of just looking at data coming out of an AE file. So this is kind of the lens when you're looking at it from the entire top-down approach, where we look at our entire portfolio. Where this can really become powerful for people beyond kind of the fund level, their portfolio levels, maybe I want to drill into a market or a specific asset type. So in this example, maybe I want to look at something that's got a positive kind of story to tell. So we can look at residential or industrial. And where this can be beneficial is you can very quickly look from my entire portfolio of 79 assets, narrow it down now to a specific sector. So if we flip this and look at our residential assets, we can see the entire story is now updated a little bit. My portfolio has 12 residential assets. I'm comparing now against 3,290 residential assets. I can still see now that I do tell a much different story as it pertains to the appreciation. So in this case, my fund has a dual positive effect. I'm positive on the cash flow side and the yield side. Now the benchmark is as well, but I'm actually performing considerably better. I've got a lot more compression in pricing. I've got some very high quality assets. It looks like all my assets are 100% occupied. I've got good market rents and whatnot as well. So we can kind of see that, and everything's tracking on par with the actual market. Now within this, where this really becomes powerful is looking at this in the lens of not just my specific asset class, but are there certain areas where I'm performing better or worse? So if we kind of look at the attribution by geography, this is where we start getting into kind of where do I stand in the market in specific submarkets. We can see from a residential perspective, there are certain markets like Miami and DC where I'm heavily allocated. Like my portfolio is weighted 35% in one and 34% in the other. And I can see, for example, in DC, I've very kind of highly outperformed what's going on there. Miami is a little bit different story. It kind of trends to where I'm not performing as well. My assets haven't performed well there. But we can kind of go in now and look, okay, well, inside DC, maybe I want to see what's going on in that market. So there's the ability to come in and drill in even more kind of detailed and get into the asset level. And now within the asset level into a specific market. So here, if I choose that DC market, I can see I've actually got 2 assets in DC comparing against 142. In this example, I have very much outperformed the market. It is a combination of yield and cash flow. Again, those 2 properties are performing very well. Strong cash flows, pricing compressed considerably more in line with what the market's doing. And now we can actually get into some asset level analysis. So in this example, those 2 assets, we see I've got property 5 and property 69. Property 5's growth really has been on the cash flow side versus property 69's had a combination of pricing and cash flow driving it. We can actually drill in and see those if we choose to. So you can actually expand this cash flow piece out and see in both cases, contract rents and market rents are rising. If we go out and look at other things like the operational ratios and the growth rates, we can see how they're standing as well. So we can see from an OPEX perspective, both of them have kind of dropping operational costs. Now, this is kind of looking at the assets in the lens of what's going on this specific period, but those 5-year lookbacks now hold as well. So we can go and look at into this time series data and see how these 2 specific assets have tracked. And we can see they're tracking along the same line as the market, although with much stronger occupancy over time. So as we started out the call, Matt talked about the different ways people are using this. So we start off with that high level top-down approach, but as you can see, we can get down to individual assets and how those assets are performing. So that is the demo I had prepared for Benchmark Manager today. So I believe we're going to run another poll, and then I'm going to turn it over to Matt to close out the conversation.
Sure. So on this poll, we'd like to just get an understanding of sort of the why behind you're interested in benchmarking. Is it to stay ahead of the competition, to assess performance against the market? You're looking to get into the allocation and selection that Paul was reviewing, or really to understand the variances better? So it looks like that poll is coming to a close, and assess performance, or no, actually it's 47% better understand performance variances, and then assess performance against the market with 33. Okay, great, thank you for sharing that. And so the last thing we'd like to do before we close today is to talk a little bit about future releases. So we did just release this at the end of March, but we've had numerous conversations. We've given tons of demos. We have some clients who actually bought it. And so we've gathered a lot of feedback on what people would like to see. Far and away, the top two that people have been asking for is to expand those properties into property subtypes. So being able to see those and drill down into those was one of the most important things for people. The second was the ability to tailor those the CBSAs that Paul was showing. Right now we have 15 of the top ones in the US that are listed out. But you might not be in those markets, you might be in other markets, you might want to see something a little bit different. So right now we're thinking through what that would look like, how we could bring in other markets and fit that in, make it relevant without just adding everything in and blowing up the UI. A couple of the other ones that have really floated up to the top, actually being able to create your own benchmark. So being able to look at core plus, different fund types, and being able to select that and filter that as the benchmark that you go against. And then a lot of our larger companies that we work with, we're really looking for a global expansion. So you can see there, we won't go through the full list, but definitely a lot of good ideas there, things that we're working on. The property subtype expansion and the tailoring of the market segmentation are the two we're investigating now to see how we can do those. Don't officially have a release date for it, but that's definitely something we're looking to do later this year. So with that, that is all the prepared material that we had today. So I just wanted to say a big thank you for taking some time out of your day to join us and hear about what we have on benchmarking.